This is Tuesday, February 25th, 2026, and in the next 48 hours, the world could be at war. Right now, silver is trading at $87.87 per ounce. But here is what the mainstream financial media is not telling you. Two Israeli officials told Reuters they believe the gaps between Washington and Tehran are unbridgeable and that the chances of near-term military escalation are high. President Trump has set a deadline, 10 to 15 days for Iran to make a deal on its nuclear program or really bad things will happen. That deadline runs out this week. Aircraft carriers are in position, fighter jets are armed, and the world is holding its breath. If you own silver, you need to understand what happens next. If you are thinking about buying silver, you need to understand the historical patterns that nobody is talking about, because what I am about to show you could change everything about how you position yourself in the next 48 hours. War changes everything, and by the end of this video, you will understand exactly how silver reacts when bullets start flying. Welcome to AG Profit Hub. This is where we cut through the noise and show you what is really happening in precious metals markets while everyone else feeds you the official narrative. Subscribe right now and hit that notification bell, because if war breaks out this week, you will want real-time analysis on how to protect your wealth. If you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see the truth. And trust me, what I'm about to reveal is something you will not hear on mainstream financial news. Before I show you the historical data, let me remind you where we are right now. I have been tracking this geopolitical situation for weeks. I told you about the tensions building between the US and Iran. I warned you about the military buildup. And here is what has happened. Silver has performed exactly as history predicted. Silver has been increasing in value due to a combination of scarcity and both industrial and investor demand. The metal has recovered from the brutal January sell-off that briefly wiped out nearly 50% of its value. But here is what the headlines did not tell you. Washington has given Iran a strict 10 to 15-day deadline on nuclear enrichment, which has added a big risk premium to metals. Because silver is more volatile, it tends to react strongly to this kind of news, which explains today's large gains. Geopolitical risk is now priced into every ounce of silver, and if that risk becomes reality, the price response will be explosive. Let me explain how war affects silver prices, because most people do not understand this, and that misunderstanding could cost them everything. During a military conflict, investors often seek security in assets that are considered safe havens, which can include silver and gold. This shift can drive up silver prices temporarily, although its impact may not always be long-lasting. But here is where it gets interesting. The pattern is not what you might expect. Gold often reacts within hours or days to breaking geopolitical news. Prices tend to spike on fear, then sometimes pull back if the situation calms quickly. Silver follows a similar pattern, but with more volatility, much more volatility. Silver typically lags gold initially, but delivers stronger percentage gains during the latter stages of war-driven bull markets. The gold-to-silver ratio often contracts significantly as these cycles mature. Let me show you the historical data, and pay close attention, because this is where the real opportunity lies. Vietnam War. 14 years of conflict. The Vietnam War pushed silver up 378% across 14 years. Silver went from around $129 to over $6 during that period, with multiple spikes during key escalations. Afghanistan War. This is even more dramatic. War began with silver at U440 with a finish at US2377 and peaking at US4948 in 2011 at the halfway point. Across 20 years, silver moved up 440%. Do you understand what I just said? 440% gains over the course of that conflict, and it peaked at $49.48, more than 10 times its starting price. Now let me show you what happened during the Gulf War, because this is the pattern most relevant to what we face today. In 1990, Iraq invaded Kuwait, causing a global reaction. This event had a big impact on gold and silver prices. Gold prices went from about $384 per ounce in July 1990 to a peak of around $403 per ounce in August 1990. That is a 5% spike in just weeks. Silver moved even more aggressively due to its higher volatility. But here is the critical insight. Gold tends to rise before or at the start of conflict. This follows the classic market pattern. Buy the rumor, sell the fact. This means that once the official news hits, the market has already priced in the event. However, and this is crucial, when a major war leads to more government spending, rising debt, and money printing, gold and silver prices often rise over time. The key factor affecting gold and silver may be the length and severity of a war. Now let me show you exactly what is happening right now, and this is the part that should have your full attention. Since 13th January 2026, tensions between the United States and Iran have intensified amid Iran's ongoing crackdown on nationwide anti-government protests. Iranian officials warned they were ready for war after President Trump threatened potential military action. Let me walk you through the timeline of escalation. On January 13th, Trump threatened military action. The U.S. government signaled that airstrikes remained an option, emphasizing that all responses were under consideration. On February 3rd, 6 IRGC Navy gunboats attempted to stop and seize a U.S. tanker in the Strait of Hormuz. A U.S. F-35 fighter jet shot down an Iranian Shahed 139 drone approaching the aircraft carrier USS Abraham Lincoln. On February 5th, Iran seized 2 foreign oil tankers near Farsi Island in the Persian Gulf. When speaking at Fort Bragg on February 13th, Trump declared that regime change would be the best thing that could happen. And now, just days ago, Trump appeared to set a deadline of 10 to 15 days, drawing a threat from Tehran to retaliate against U.S. bases in the region if attacked. That deadline expires within 48 hours. The military buildup is unprecedented. The Pentagon has moved the USS Abraham Lincoln Carrier Strike Group through the Indian Ocean toward the Middle East, adding a carrier, 3 destroyers, and roughly 5,700 personnel to the theater. Trump has ordered a second aircraft carrier to the region. Iran has responded in kind. The Islamic Revolutionary Guard Corps held a series of war games in the Strait of Hormuz to prepare for potential security and military threats. Tehran announced new joint naval drills with Russia in the Sea of Oman. Both sides are now at maximum military readiness, and both sides say they will not back down. A former U.S. diplomat and Iran specialist stated that nothing meaningful can emerge unless the U.S. and Iran walk back from their red lines, which I don't think they will. This is not a drill. This is real, and the clock is ticking. Now let me tell you exactly what happens to silver if war breaks out, and I am going to be very direct with you. This is why physical metals prices benefit from war, because their price moves higher to reflect the increasing money supply. Governments do not pay for wars, they print money. And when money is printed, hard assets like silver protect your purchasing power. But there is another factor specific to Iran. Iran has asymmetric leverage in the Strait of Hormuz, and through partner forces capable of threatening Red Sea traffic. Those vulnerabilities turn any Israel-Iran or US-Iran exchange into a global economic risk event. If the Strait of Hormuz is disrupted, 20% of the world's oil supply is at risk. Energy prices spike, inflation accelerates, safe haven demand for silver explodes. Iran has already outlined retaliatory options, including closing the Strait of Hormuz in the Persian Gulf. If Iran's trade routes are disrupted, the regime will retaliate by impeding global trade using thousands of coastal anti-ship missiles alongside naval mines and patrol craft. This is not speculation. This is their stated strategy, and here is what the Silver Institute is projecting. The market will face its 6th year in a row of shortages in 2026, with a shortfall of 67 million ounces expected. War would only accelerate that shortage as industrial supply chains are disrupted and investment demand surges. Historical patterns suggest war cycles often last 3 to 4 years, though this can vary based on geopolitical factors and economic conditions. The current war cycle may extend to 2027-2028 based on cyclical analysis. If we enter a prolonged conflict, the historical data is clear. Silver moved 378% during Vietnam. It moved 440% during Afghanistan. The math speaks for itself. Now let me tell you what this means for you, because understanding the situation is useless if you do not know how to act on it. If you are holding physical silver, you are positioned exactly where you need to be. Silver is considered a safe haven asset during military conflicts. People often turn to it to preserve value in uncertain times. This historical role is evident during various conflicts when silver prices increased, as investors sought to shield their portfolios. If you are holding paper silver, understand the risks. War creates counterparty risk, currency risk, settlement risk. Physical possession eliminates all of these. If you're looking to buy, understand the timing dynamic. Any short skirmish between Israel and Iran would likely follow the pattern of other short-term conflicts. That means gold and silver prices might spike when the war first breaks out, but then pull back shortly after. But if this becomes a prolonged conflict, if the Strait of Hormuz is closed, if oil prices spike, if money printing accelerates, the pullback becomes a buying opportunity, not a signal to sell. The next 48 hours will tell us everything. Watch the headlines, watch the Strait of Hormuz, watch the military movements. Let me leave you with this. 2 Israeli officials believe the gaps between Washington and Tehran are unbridgeable. Military assets are in position. Deadlines are expiring. Both sides say they will not back down. The number of armed conflicts is now at its highest since the end of World War II. An increasing proportion of those, moreover, are interstate conflicts, reversing a post-Cold War trend. We are not living in normal times. We are living in a world where war is becoming more likely, not less. And throughout human history, in every major conflict, silver has protected wealth when paper currencies failed. Vietnam, 378%, Afghanistan, 440%. Those are not predictions. Those are facts. Historical data that nobody can dispute. The question is not whether war affects silver prices. The question is whether you will be positioned when it happens. Drop a comment telling me whether you think war breaks out this week. I read every single comment. Subscribe if you have not already. Hit that notification bell because the next 48 hours could change everything. The world has undeniably become more violent and disorderly. And in a world of chaos, silver has been the safe haven for 5,000 years. That is not going to change in the next 48 hours. This is AG Profit Hub because the real story is never on the surface. I will see you in the next one.